SPY is breaking the August highs and hitting critical resistance. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart, see what's going on in the stock market today. All right, today's SPY was up 0.66% and we are gapping up and closing near the high of the day, but we are sitting at what I consider a critical resistance level right around 436. However, there's a good chance we are pushing higher towards 441 and possibly even 450 while we're trading above the breakout at 429. Remember, this is the breakout from the August 2022 highs, and now you have to beg the question of whether or not we're even still in a bear market because we're breaking through some very critical retracement levels. So on SPY, watch for resistance at 436 and 441 with downside support if we get a rejection at the gap fill just below 434 and the breakout of the neckline right around 429. Remember last week I said SPY above 429 is a short squeeze territory, which means we're pushing to higher prices, and so far that's exactly what's happening. If we break the support at 429, you can get more bearish for the gap fill below 423. On the NASDAQ 100 triple Qs, we were up 0.77% today, and we're breaking out of the bear cave with the close above 360 with the next upside targets at 368 and 371. But we are closing with a bit of a hanging man candle, which means we could be near the end of this rally, and this could have just been a short squeeze breakout above 360 before we see a big tech correction. Now keep in mind, even though a big tech correction is likely around the corner, we need price action to prove it, which means we need a loss of critical support, and right now we need to at least break down below 360. But the real loss of support we need for a correction will be the break of the neckline down here right around 347. So don't get bearish just to get bearish. If we break 360, look for a retest of the breakout at 355. And if we bounce from 355, that's just another higher low before the next higher high, which could take us to 368, 371. On the Dow Jones, we were up 0.43% with another breakout above resistance at 341, which means we're likely well on our way to the next target higher at 346, and we're bullish as long as we're above the breakout at 336. You don't want to use 336 as your risk level, use the breakout at 341. On the Russell 2000 IWM ETF, we were up 1.15% with another higher high breakout after another higher low, but we're sitting right at resistance at 188, and if we break 188, we're likely running all the way higher into the 190s at 195 and 198. Don't just assume we'll break resistance. There was a lot of selling above that resistance today, but you can stay bullish above the support at 184 to 185. And if we break that support, look for a retest of down here at 180. On the ARKK ETF, we're up 2.33%. We're pushing higher towards the price target at 44.5, and above that, we'll likely push higher towards 46. You can stay bullish in this stock above 40.5, and if we get a pullback, you're looking for support to hold right around 42. On the VIX, we were down 2.67%, and the VIX is still crushing below 15, which is a very low fear environment, which is exactly what you see in a bull market, so we're not getting bearish until the VIX starts spiking out above 20. In Bitcoin, we're down about 0.25% and still in the bear trend and likely heading down towards the price target at 24,000, and we're not getting bullish until we can make a higher high breakout above 28,000. On Amazon stock, we were up 0.07%, and intraday we did hit the price target above 128, but instantly found sellers. But overall, we still have the bull trend, and we are starting to break out above 126. And if we break the price target at 128, we're looking for the next target higher at 133. On Tesla stock, we were up 3.55%, and we're very close to fully hitting the price target at 262, which is going to close that gap. So it does look like my prediction of the pullback before we go fill the up gap is going to be incorrect. However, after we fill this gap to the upside, there's a great chance we are going to fill this gap down here at 235, and we're bullish as long as we can hold the breakout at 230. On Apple stock, we were down 0.26% today, still making higher high breakouts above the previous all-time high above 182. But this is elevated territory, so you need to be cautious if you're still going long at this level because your risk level is all the way down here right around 177. You could stay bullish above 182, but that's your risk level, and if we break down below it, look for support at 179, 177, and the gap fill just below 176. On the financials, we are up 0.6% today, and we're very close to testing the 200 daily moving average, and if we get the bull breakout in the financials, it's going to be very difficult to not expect the S&P 500 to go to higher prices. On the industrials, we're up 1.16%, continuing that bull trend after we had the bull breakout above 101.5, so we're still bullish above that breakout. The healthcare sector was up 0.5% today, getting the break back over all the moving averages with the price action, and this could be a bull breakout ready to run as long as we can hold the breakout above 131. We could reach targets at 134 and 137. The energy sector was up about 0.5% today, still getting rejected from that resistance right around 82, and I still think there's a very good chance we are going lower to close the gap at 73, but if you want to stay bullish, you can do that above the neckline breakout at 80.5. So jumping back over to the S&P 500, we continue to climb higher ever since we had the breakout above the August highs, so don't expect anything less while the price action and trend are bullish, even though there are plenty of people out there telling you the market's going to crash, and they're telling you all year long this is a bear market, and all you can do now is see that they were incorrect and how important it is to follow the chart. Let the price action and the trend do all of the talking, and make sure you check your bias at the door. Come check us out at the Stocks Channel Discord or my trade alert service called Bank Trade Alerts, and you can find out how to join either of those services by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.